Welcome back to everybody, and thanks for joining us. We will now present Enefit, a wind and solar developer, and I also think I saw some other green projects there, Baltics and Poland. So very familiar business model to Danish people, maybe a not so familiar region. So maybe we will dig a little bit into what the advantages could be on focusing on those regions. So I will hand the word over to you, and you can do the presentation.
Hi, good morning. Very happy to see you. My name is Veiko Raim. I'm CFO of Enefit Green, and very happy to tell you a bit about our story, how have we grown, and what's the way forward for us as we see it in these turbulent times, especially over the last 12 months. So maybe a little bit of a background. Enefit Green is based originally in Estonia. We have a long 20-year history in renewables. And we actually have our home markets in Finland through the Baltics and Poland. We like to grow. I mean, we are basically built up to growing our portfolio. We are currently the largest wind energy producer in the Baltics, and our aim is to be actually by 26 the largest renewable energy producer and grow also fast our portfolio in Poland. And perhaps finally here I would like to highlight also that we became public in 2021 in October. So we've been listed more than 1.5 years now, and we were happy to have actually 60,000 retail investors in Estonia involved in our offering, which was a huge landmark success in the Baltics. 4% of the population subscribed for the shares, so that was a huge success story, and brought about actually other transactions as well. So what do? We generate power actually from wind and solar, actually also from biomass in certain aspects, but our growth area is clearly wind and solar in our target markets. So why have we picked our markets? I mean, we see that in our home market there is a threefold opportunity. First of all, the carbon intensity in Estonia, Poland, and also further in the Baltics is still there, that there's still a lot of carbon intensive power generation that actually needs to go out. Hence the need for the new renewable and competitively priced power is very sizable. Of course, over the last 12 months especially, we've noted increase in the need for energy independence as well, given the turbulent times in the gas markets, and which has also carried over to the power markets. And finally, I would also like to highlight that there's a clear supply and demand gap in the Baltics and Poland. Already today, even though that there is still a lot of carbon intensive power in the market, there's still lack of power supply. So if you look at the left hand side now, here we highlight the annual production and consumption in our target markets and neighboring countries. So here you can see that Norway and Sweden are well positioned actually, just in terms of demand and supply. They're exporting their power also to neighboring regions. Finland is improving given the new nuclear power that they have come online, but actually in Estonia, Latvia, Lithuania, and Poland, there's still a sizable gap between supply and demand, and this is already before the carbon heavy power goes out of the market. So essentially we see that there is a supply demand gap first of all. Secondly, of course, what we have experienced over the last 12 to 18 months in the power market has been very high prices, which have been very tough for the consumers. For power companies, it is just a clear signal that we need more renewable generation, we need more wind and solar in these markets. And what we can see also from these prices below these countries is that in the Baltics and Poland, actually the power prices have been, well, not quite as high as in Germany, but actually quite high and higher than in Scandinavia. So I think this clearly demonstrates the need for more renewable power and more supply of any type of power in the region. So we have two things. One is that there is actually there's a very fossil-based supply, and then there is high prices, and plus we also see a lot of growing demand via electrification also coming to even increase the demand side even further. All in all, of course, this year has begun compared to last year a bit better. So we have seen that in the Nord Pool system, the first quarter has seen 20% lower prices than last year, but whatever year we compare with, they have been still very high. So actually, even this 20% reduction is not probably enough for the consumer to really appreciate what is going on. So what do we want to do? I mean, we have currently a portfolio of 457 megawatt of capacity. in wind, solar, and biomass-based CSPs and waste-to-energy plant as well. What we want to do is grow our capacity 4 times larger by 2026 with the portfolio of 800 megawatt of wind and 600 megawatt of solar capacities. And really that is expected to bring about also about 4 times larger production. And of course, we need to grow our team in order to take this forward from 180 people to 220 people. But ultimately, we expect to be at electrical capacity of 1900 megawatts by the end of 2026. And really to achieve that, we expect to invest around 1.5 billion euros in the period of 22 to 26. So that was originally the story why we went public. So we took in equity. We of course generating cash ourselves. Our current operations are very, very nicely cash flow positive. And then finally, we're of course leveraging up our debt capacity as well. So how have we been setting up our company? I mean, we have our strategy and strength based on 2 pillars. So firstly, operational excellence. We actually take a very detailed look at our capacity, our portfolio operating. So we know the turbines intimately, if you want to call it that. So we are very operations focused, technology and data focused. Our maintenance team actually, we don't have the sort of the guys who actually do field work, but rather data analytics and more knowledge on the predictive and preventive maintenance side. So essentially, our asset management strategy is just to make sure that we achieve the highest possible availability of the wind turbines, which is more than what the contractors provide you with, but at reasonable cost. So there's always the cost element as well. Secondly, we have the vertically integrated business model on our operations side. So we do everything from the early phase of development through the actual construction phase, through operations phase, through the final phase of actually even decommissioning and re-permitting and redevelopment. So essentially, we do everything. We like to keep it in one company. And finally, our largest shareholder is HC Energia, the dominant energy group in Estonia and operations in the full Baltics. So we have a good arm's length relationship with them, which actually allows us access to also energy trading and energy sales, i.e. the final customer portfolio, which benefits us via the capability of reaching PPAs for our developments and operating assets. On the flip side, we focus on fast growth. We first on operations, then on fast growth. Then we have significant sizable near-term pipeline. First of all, we have projects. Secondly, we have very experienced development team who have developed assets from really greenfield up to the operation development, the construction and operations. And finally, we have strong capital base from which to develop. One final thing I'd like to say about our development team is that it is very important that this development team is local in all our operating markets, because we may think that constructing wind turbines and solar farms is easy, but actually it's all to do with the local regulation. It's all to do with the local governments, local inhabitants in these areas where we develop our assets. A lot of local communication goes on. So we pride ourselves at having actually local development teams in Baltics and Poland. So that's where we focus the most. Yeah, I think that is it about the strengths. So a bit what is currently ongoing. I mean, we have, as mentioned, 457 megawatts of capacity in operations. That's a dark blue bar on the left-hand side and right-hand side. We have projects under construction, which we are updating on a quarterly basis when we say out our results. And of course, if we add something to construction, we say it out then via stock exchange releases as well. What you can see is actually our construction portfolio under construction is already larger than the operating assets, so 596 megawatts. And if we complete all of these, which the latest is by the end of actually beginning of 25, yeah. So this is the plan. Then actually we will have already more than doubled our capacity. And these are wind farms and solar farms in all our target markets. Latvia is still missing, but we are making already headway also there, and we have certain investment decisions we expect to make in Latvia as well. So essentially, currently we have about 10 wind farms and solar farms under construction in all our target markets. So we are progressing fast. what we usually do is we also outline our near-term development portfolio. Here you can see it in this yellow slice, which is another 400 megawatts and a bit more. These are the investment decisions we expect to make this year, which is also wind and solar, quite in equal proportions. So by the end of the year, we expect to have already 1,500 megawatts in construction or operations, right? So essentially, that is already almost 3 times as much as we have, and then, or even more than 3 times. And then what we also have is the so-called long-term pipeline, where we expect to make investment decisions from next year onwards. This is a living organism, so to speak, the development portfolio. So some of these projects will grow in size, some of these will come forward, some of these will further backwards, some of these will not materialize. But this is the capacity that we are still working with the long-term development portfolio to bring them forward and also realize that. So this is how the 1,900 megawatts is expected to realize. So 1,500 by the end of the year, by the operations or construction, plus another 400 megawatts to be decided next year or the year after to be operational in 2026. In addition, this is not all. So we have 2 offshore wind farm developments, which is Liivi offshore wind farm, where we expect to make investment decisions 2025 or later. And then Hiiumaa offshore wind farm, where we expect to make investment decisions later on in the decade. So these are the early stage offshore wind farm developments in Liivi, which we have just recently acquired from our parent company. Our parent company had also signed a cooperation agreement with Ørsted, the Danish large offshore developer. So essentially here we are looking to progress quite fast, to see whether there is a ability to realize these in this time frame, in this decade. And then if one takes all together the pipeline that we have, it's about 4.9 gigawatts, or 4,900 megawatts. So essentially we have a lot going on, and we are trying to add to this portfolio every quarter and every year. Right. What else? I think we've moved fast. We have left more room for the questions. Our 22 summary can be seen here. So of course 2022 was basically for a power producer with the high prices, actually a very strong year. So we have seen more than 20% growth in our EBITDA and also sizable growth in our net profits. So of course, the wind year wasn't especially good. So there the power production of ours was actually in decline compared to the year before. But this is what wind is like. There is actually the changes between the years are quite sizable. So last year was small, quite low generation with high prices. This year, at least it has started quite well, and actually the first months have been reasonably good. Power prices have been lower, so this is our daily life, and these are the things we manage on daily. We have clear pipeline, as I mentioned, to deliver on our quadrupling plan of capacity by 2026. We have done actually last year 6 new investment decisions, and altogether we have 596 megawatts under construction. But on the financing side, I'd like to highlight as well that we have refinanced all our sort of loans which were near term, end of last year. And we have also signed recently new loan obligations or loan agreements to allow for this such rapid growth outside, which is actually very good because our strong banking partners in SEB, Swedbank, OP from Finland, in terms of regional banks, as well as EIB, NIB, and EBRD from the development banks. I mean, they all actually want to fund and finance the green growth. So we have a strong working relationship with all of them, and then NIB and SEB especially, we have signed new agreements with at the beginning of this year. Few more notes to take. I mean, we outlined that we have signed 4.9 terawatt hours of PPAs last year. So a PPA essentially is an obligation for us to deliver renewable power to the counterparty who sell these to the clients. So this generally means that there has been at least 4.9 terawatt hours of long-term competitively priced power sold to final clients last year in our region. because as the trend is away from the subsidized generation more towards the private market-based power purchase agreements, then actually the capability of signing these agreements is of paramount importance. Of course, we have seen also high prices on these agreements. This year the prices may be lower. It is a volatile market, so we'll need to see. But the ability to have this risk management mechanism in place is hugely important for us, because we don't invest just against the market. We need to have some revenue security at least for our projects to go ahead. We are paying dividends, so we have proposed for the last year 20.8 euro cents per share dividend, so which is about 1/3 more than the year before. We have currently a dividend policy which says that we pay out 50% of what we earn. So this we have kept through the last years, and of course this still needs to be approved by the general meeting, which we'll have actually in about 3 weeks' time. But this is the proposal from the management board that has been confirmed by the supervisory council. Finally, sustainability principles we set as well. I mean, even though our sustainability is at our core, what we do in terms of our business, we roll out wind farms and solar parks, then still we are doing more in this, also the governance regard and the social regard. So we are working on details and goals more specifically this year to put in place also a more wide-reaching promise than just 4 times growth. Right, I have actually gone through all my slides. There are a few things in the appendix as well, which, in case interest, I can.
I think maybe we should jump to the questions. The first question to mind is, I'm not sure whether you went through this. You also have a business model where you sell part of your projects to finance the new one. Will you run it all, or will you sell part of it off to finance new projects? Is that a part of your business model? Where do you see a value creation by doing that, or is your value creation owning it, building it, and running it? So a little bit of thoughts about that.
Thank you. Very good question. So this actually farming out model has been popularized very well by Ørsted, and I think followed by a lot of other power companies around Europe. So we today haven't actually had a lack of capital, so we haven't needed to do that. So currently we are very much still low leverage, quite high equity ratio based. So essentially we have been more focused on gearing up our portfolio, growing our portfolio in order to have even bigger platform to earn more and return more to our investors. However, we have actually set our company up in such a way that we can actually entertain this idea later on in the next phases. For instance, at some point we will probably start considering how do we finance the offshore. Offshore projects are larger. We will probably need partners, but even so, even the stakes that we will retain will require certain ways of financing, and then these options are on the table, because actually the farming out model is well known, and we have been following it with great interest.
Then there's a little bit about on the financing side. I know you haven't financed out to 2030, but how much is financed? Is you born with that much, capital that you actually can finance most of your midterm build out by taking in debt, or how is your model going to change? And then the second part, I understand, but so many local investors, dividend is important, but it's also paying out money that you could invest in the future. So a little bit about how the model, if we should see it midterm, whether most can be financed by debt. Whether the dividend will be upkept or a different strategy, or will you need to take in new equity?
Understood. So let's take a step back. When we went public in 2021, what we promised to investors that we want to be by 2025 2.3 times larger. So that was our original promise. Actually, all of this is currently under construction. So essentially, what we said in 2021, we need to construct and maybe a few megawatts more, but essentially we will have delivered ahead of time. Then last year we had a look at, of course, the new world, higher power prices, more need for the power, we said that we actually want to grow more. We want to grow 4 times for adding 1 year and actually doubling the capacity. And when we looked at our financial projection at the time, we saw that we can actually do this, growing 4 times larger by still maintaining 50% dividend that we promised to investors before the IPO, and actually not taking in additional equity. So we can finance it via debt, because actually there is so much reasonably priced debt available for us for such developments. And our financial metrics are such that we've set out also our financial policy that an operating phase, we want to be 4 times net debt EBITDA. In the construction phase, we can be 5 or a bit higher. And currently we have maybe 1 times net debt EBITDA. So essentially, we still need to engage quite a bit of debt in order to really deliver these returns to the shareholders that have trusted us with their capital. However, what I also would like to add is that as this is a dynamic world, we may have new ideas, we may have new ambitions, maybe grow further, grow faster. So if these things come about, of course, then of course we may consider various ways of financing. But today, for this 4 times, we can see we can do 50% payout, and then, of course, also not needing additional external equity.
Then this question, what are your thoughts about wind compared to solar? You know, this competitive, there's a little bit about rethinking in green hydrogen, you know, making more fuels, and maybe the storage problem, you know, with this one, maybe it's so undersupplied in those countries that we have a little bit of less problem with that. But you're thinking about putting green hydrogen in, and then maybe on the storage side, whether you also are thinking about that. I know it's big questions and how the future and the prices will evolve, but very appreciate if you can give us a little bit about your thought about that.
Very fair. So firstly, wind and solar, how we think about it is we don't see them as actually competing. We rather see them as complementary. And I think the most valuable thing today in these markets is actually network resource, which means that, you know, the network capacities, in order to build out so much generation, there's so much network investment needed. And this, I think, is still an outstanding question in most markets. That, okay, who will finance that? I mean, are these developers? Are these actually customers who are financing via their network tariff, so on? So what we do, we actually want to combine wind and solar behind the same network metering point, essentially same network connection, because these profiles are so complementary throughout the year that wind produces in first quarter and fourth quarter, solar produces in second and third quarter. So essentially, you can utilize this network connection for much more hours if you combine wind and solar. So these we call hybrid farms, and we have the first one operational now in Estonia, which is a small one, but we're adding more. So essentially, wherever we want to build wind, we're looking at ways how to actually combine that with solar and just utilize this network capacity even to the fullest. And the next step after that, indeed, you can put even more windmills and solar behind the same connection point in case you can store some of this. And what we look at is really various forms of storage, whether it's batteries, whether it's green hydrogen. But today we still see that, at least in the Baltics, the problem is not so acute yet. I mean, today the problem is too little generation capacity. So we are more looking at pilots. We are working with pilots just to see that, okay, how do they complement the existing farms, and how do they can even increase the amount of power that you can put into the grid via the same connection, because this is ultimately what we are after, that you can put more and more megawatt hours into the grid in a more stable format by utilizing also storage alongside wind and solar.
So I understand that must be a competitive advantage of doing projects in that, so that investors might like that there's a low load into the network. I guess, and we need to touch upon it, your placement, your region, Poland and the Baltic regions.
Mm-hmm.
Is there some investor pushback to that? I know hopefully we are soon over discussing that, but right now we kind of need to discuss it, right? That where you are placed is in a region where it's a little bit more political uncertainty, or what should we call it, like the Ukrainian crisis. So do investors see the advantage of lower load versus that the region might be a little bit more, if you go up in a high level, uncertain to be in?
I mean, ultimately, Russian aggression against Ukraine touches us all. So this market, power market especially, and financial markets are it is an existential conflict for our markets. So I think there is no doubt about it. And I think that this view is quite widely shared also and understood and appreciated also in the Nordic countries, especially Finland, with a long border with Russia. So I think there's no illusions about this being a very serious situation. However, on the flip side, what we see that actually our investor base has been very loyal and very local. So I think around 80% of our investors are either retail or actually local pension funds or the regional Baltic investment funds. Finns have also quite a large stake, so actually quite a sizable presence. And I think there's the understanding of the political risk is there anyway, and it's almost like this is the industry where you would like to put your money in order to increase the security of supply and actually earn some money as well. So I think maybe the questions we get asked are less because the regional investors take this into account. What we see in terms of debt financing, again, the regional banks are there. Also the development banks like NIB, EIB, EBRD haven't actually reduced their willingness, rather the opposite. They are willing to finance more. So today we don't see any issue in terms of funding. So of course, if we had a sizable investor base in Western Europe or further out in the US, perhaps their views might differ and their preferences might differ, but regional investors are solidly behind us.
Thank you. Let's leave on that note. Thank you very much for taking us through your interesting company.